Good
Good
morning.
morning.
Welcome to Friday.
It's
Friday.
Friday.
Friday. I think, David,
I
are
think
you
we're
in California or overseas?
oh, you're on mute, David.
He's trying to figure it out.
David Pierce. You have a mute button on.
Oh, there we
There it
go.
is.
Found the button. Right. Yeah, I am in California. Yeah, even though I have a
Oh,
funny
Okay.
British accent.
you looks
Yeah,
like
I
you
thought,
look like you're in Minnesota with your cap on and your coat.
Yeah, well, we've had like uns I've been here 8 years now in this area, and we've never had fog like this. It's been like constant fog every day for the last week. So we've
Which
had
part
seven or
which
eight
part of
days.
California are you in?
Near Sacramento,
Oh, yeah,
north.
I lived in Santa Barbara and San Diego, and winter we had a lot of fog. It took forever to burn off, and especially Santa Barbara.
Ah, yeah. I like Santa Barbara. That's a great place.
Yeah. Yeah, it's gotten a lot bigger since I lived there. So I was back a couple of years ago. A lot different. So
2 years
anyway,
ago. Okay, yeah.
yeah, I lived there in the 90s, and then in the 80s I lived in San Diego. So
So
right
you're
off
really
the
you're a hippie, really, aren't you?
well, I don't know about that. I don't have enough hair to be a hippie anymore, I don't think. So
apparently
You
you
and I
don't know
both.
Mark.
All right,
yeah.
we're forming a club here. I got as much as you.
Well, there you go. Yeah. So
It's,
all
it's the
right.
Genius
Well,
Club.
it is Friday. It is December 12th. We basically have uh you know uh 6 trading days counting today left before the holidays, and then it's going to get really pretty slow. Let me pump this up so we can see what's going on here. So we got continuation of what happened yesterday. You kind of got the Nasdaq and the S&P, which are more tech heavy. We're seeing the tech go down, and we're seeing the rotation into different areas such as the Dow, and the Dow is a uh, weighted by price. The S&P and the Nasdaq
Okay.
are weighted by market cap. And so, the higher your market cap, like NVIDIA is what 7% of the S&P by market cap. So that really weighs down, and it's even probably more on the NASDAQ 100. Uh, and you can see, as we see, looks like we're going to have a tech slide again, and it's back to Oracle. Yesterday was the Dow was up 1.34%, almost 600 points. The NASDAQ was down 60 points or a quarter of a percent, and the S&P was up 14 points or just 0.21. Advancers were 58%, decliners 38. Above the 50-day moving average, almost 55%. So we're seeing market breadth move in the other direction, which is good. And above the 200, 55.6%. What we saw is you saw a lot of moves out of AI and into names that can benefit from a growing U.S. economy. So, we've got the Fed have cut interest rates. The Fed are juicing the economy now by buying more short-term bonds, the T-bills, 30-day T-bills, which is interesting. And then you had Oracle come out, with their earnings. And, I looked into Oracle, and Oracle really has led this thought process as I've researched it in the AI area of, okay, we're spending just a lot of money. When do we get a payback? When are we going to see this payback? And in the case of Oracle, when you go back and you look, when Oracle came out and they talked about all the money they were going to bring in, I think it was September 10th. Yeah. Oracle told investors its remaining performance obligations, and they called it an RPO, or value of its future revenue from customers, okay, not actual revenue, was $455 billion. And that's when the stock went way up. Wow, look at Oracle. They got, future revenue of $455 billion. And then later it came out when they started looking at what these customers were. 300 billion of that 455 billion was a commitment from OpenAI. It's Sam Altman's group of his company, private company that doesn't make any money, is going to pay $300 billion for Oracle's technology and products. So since then, when they kind of came out with that it was OpenAI that had a majority of their future commitments, that's when we started to see the stock struggle. And so, they're we're actually go what is future commitments and what's actual commitments that they're going to get. And I think you're seeing that And you're not only seeing that in Oracle, you're seeing it across the board in some of the AIs. NVIDIA has been, Trent and I were just talking about, NVIDIA has been sideways since when? August or something, Trent? And we can look at the chart, but they've been sideways
Yeah.
for a long time. We did have a Avco or Broadcom came out. They beat on revenue and earnings, and they issued a strong forecast driven by AI demand. So back in June, Broadcom said they had 3 customers and 1 prospect for its custom AI chips. They're making custom AI chips. And now they announced a 5th customer, although we don't know who that is, for their custom chips. And then, of course, Anthropic came out and they're talking about using the Google TPU chip. Uh, and so what we're seeing also is there's a lot more competition out there than just NVIDIA now. So NVIDIA's ability for price premiums could be coming down because demand is still there for their CPUs. But as companies like Broadcom come along and say, look, I can make specific chips for you, custom chips at a lot lower price. And you're starting to see, I don't know who these customers are because they didn't say, you're starting to see that effect. Potentially, competition brings price down, price brings margin down. And that's what we're running into, I think, in my opinion, on AI. So you're seeing money flow differently and out into different areas. And I'll show you that here in a second. So let's go down here and let me put this up. This is a heat map. And this is of the S&P 500, and this is market weighted. Again, yesterday S&P was up 0.21%, but you can see why it wasn't up more. Look at all the green in here, but look where the red is. NVIDIA, Broadcom, Micron, semiconductors, Oracle down 10%. Again, this is market cap weighted. You can see how much market cap by how big these boxes are. And then you look over here and you see all the little boxes that aren't the heavy market caps that are green. Got financials, insurance, healthcare, medical devices. You got consumer defensive, industrials, real estate, basic materials, and then you got these red boxes here in technology, and that's why we're only up 0.21% in the S&P. If we go over, and we look at this is just the Dow 30. Okay, the Dow is way up. Now this is not market cap. This is driven by price, the price of the stock. Okay, moves it. So the higher price stock, if it goes up by $1, influences the Dow a lot more. So you got a lot of higher price stocks in here. And you can see where Microsoft, Visa, JP Morgan, a lot of financials went, Goldman Sachs, Walmart, these big higher price stocks, J&J, Caterpillar. And it was able to overcome NVIDIA and Amazon, Apple, because the way that they value this index. So you can see that we went up almost 600 points because of that. When you look at the Russell, this is the small caps that Trent was talking about yesterday, and these guys rely. I would say half of the Russell don't make any money. They rely on financing and selling their stocks for operating profits until they get more profitable. And you can see how green it was. You can look at the index. It's getting at all-time highs, but you can see by industrials and basic materials and healthcare up here. Technology was red in a lot of it, but some of these are green too. But really green, over in the small caps. And then here's the Nasdaq. Okay, this is weighted by market cap. Also, you can see why it was down because market cap is based on the size of these boxes. And you got Google, Amazon, Tesla, Apple, NVIDIA, Broadcom all going down. The only one that really kind of came up out of the 7, was Microsoft, and that's not enough to boost it up. And then you come into, you got Netflix and some of the others, but look at how small their market caps are compared to the Mag 7s here, which account for probably almost 50% of the index. So that's why you're seeing different looks at why is the Dow way up and the Nasdaq's down? This doesn't make sense to me? Well, that's why the way that they capitalize and look at these indexes and what's actually in it by market cap or by price. And so that's why you're seeing what's happening. We're seeing that same thing happen also today, in the pre-market. Okay, let me get rid of that. We'll come up a little bit and show you. We don't have very much left on our charts. There's three basically left in the watch list. I like to start at the beginning of the week and move them through the week and play the deck, the hands that I got dealt on Monday. And you see, we had several. We had four new ones and some from last week. Carlisle Group still hanging in there. Didn't get into that one, but boy, 10.77% since we put it on the list last week. Bitbine Immersion. This is Tom Lee's. All right, did get into that one. Up 25%. It was up 30 some percent yesterday. It came down a little bit, but it really didn't hit anything that triggered a sell for me. So 25% still good. So still in that. These were out. Target still in uh, uh, at 3.7%. That's an energy play. So those are the three that were in. Did get in Prudential. Hit an IRL. Came on. So we're up. We've been doing pretty good week by week. When you think about percent here, 4%, 2%, come down to our under the 200 list. And really the only two that we really didn't get into anything last week, but we just played them out like our cards played them out. And this week, still KDP and Dexcom. They're still doing pretty well. Dr. Pepper up 3% since Monday. And Dexcom up 7.5%. It gives us about on 100 shares, about on a paper trade, about $580 for the week on the under the 200s, just playing two of them, of the list that we had. And we come down to our 200-day investment portfolios under major indexes, still doing well under major indexes. You can see the IWM is now at 17%. It's moving up. And the S&P is at 18 since we crossed the 200. The best is still the Qs. And then down here on the Mag 7 portfolio of 200, if you were just buying everything in the Mag 7, when it crossed the 200, the only one that's out is Meta right now. So you can see your percentages here since the day that they crossed the 200, and the only one that's gotten out, again, is Meta. And if you bought 100 shares, of course, 100 shares, each of these at these prices is pretty high, but you'd be up around $50,000 on that. And I'm going to build this out a little more over the holidays and add a couple more portfolios in there on just based on the 200, because it's the easiest way to kind of invest, in my opinion. All right, let's go to some charts real quick. Trying to stay on because I want to get to Trent. Trent has some interesting insight he was telling me about. Here's Oracle. And we were talking about Oracle, and here's where, Oracle came out with their earnings, and then they talked about all that money in the future that they're going to have. And then we had distribution. And then we started talking about, well, where's this money going to come from? And when we came back to earnings again, and they came out, and here we are, and we're going to open up before lower than we closed, crossover negative on the stochastic. When you have a big gap down like that, we're below the 200, we're below the 9. And look at the momentum indicator. We went from 48 to 34 in one day with this huge old volume candle here. And we haven't seen that type of volume since the first two earnings ago, when they brought out that they were going to, have whatever it was, what was it, 455 billion of new orders in the future. And then we found out that 300 billion is OpenAI. So that's what brought the market down yesterday in the AI and technology area. But when we look at the Dow really, shows it all. Here's, the Dow's been slow and steady, kind of up, and I showed you the 30 stocks in the Dow, and it's my price. So we had this big, nice candle yesterday. We've got all the oscillators popping up, and we went from 55 on the momentum, all the way up to 66. Got the oscillators moving. We got volume up, going up. And we're going to open up right on the upper Bollinger Band. And what we notice is the intermediate resistance level has gone away because of this momentum and the swing up. And we also have some sell orders at $490.90, but the resistance is gone. The difference between that and, let's say, the S&P, which has a lot of technology in it, is that resistance is still here on the S&P. You can see we've been hitting resistance since the end of October, down, trying back up, keep hitting our head on it. And again, this is a market weight by market capitalization. We have a lot of the technologies in here, and that's why you see this didn't quite do as well as what we saw in the Dow. But the oscillators are still looking good on here, but we just got to get past that intermediate resistance, and it's going to be hard to do as long as some of these technology big guys are not playing the game like we're seeing money move elsewhere. And the Qs look the same also. Right up here, since about the end of October, we just can't quite get past this resistance level. Here's the 9 rolling up, and it's going to roll, potentially over and bring that technology price action down. That's the way it's kind of looking. We're seeing a little roll on the MACD, flatten out on the stochastic. RSI is still okay at 58, but kind of going down. But we'll see what happens today. But that's the Qs. Go back to the 3-month here. Let's look at gold. Gold's interesting now because we usually see when markets go up, you see gold go down, and vice versa. Now we're seeing kind of went sideways along resistance, and now we've popped above it. Looks like we're going to open up above the Bollinger Band. So here's where our high was, back on the 20th of October. If we can get past that, we might see gold take off and run again. But we're starting to see some good signs here on the oscillators that gold might be starting its run up again, following, of all things, silver. And with silver, you notice that the intermediate resistance line is gone on silver. It was there, and now silver just keeps going between the 9 and the upper Bollinger Band. And here we are, crossed over where the sell orders are yesterday, and now we're going to open up above, right on the Bollinger Band again. So silver's had a nice run, and still looks like it's running. With the oscillators, these are our gauges. It looks like it's running good, and the volume's good on silver. So we might see silver continue to run up a tad today. Bitcoin. Here we go. Bitcoin, we're sitting at 92.4, and we've really been kind of in this range all the way back to the middle of October. And then you could actually draw a box right about in this area here, where we've just kind of used this 90,000 as a support level. And you come up here and you're right on the upper Bollinger Band. You see the Bollingers are really narrow here. And so the upper Bollinger Band has been pretty much resistance. We do have the 50 coming down. That'll come up, then our next psychological level of resistance is 95,000. So if we get 95, then we got the 50. And remember, these markets trade 24/7. So it's always interesting on the weekend, especially Saturday night into Sunday morning, to see what happens. Any kind of issue that happens, something blows up or something doesn't go right. This is the market that people come to for liquidity, and if they're in it, they can get cash out 24/7. They can sell out if they want. So you got a lot of weekend risk, but the market's open 24/7. But again, it's encouraging that it's sideways, accumulating, and we'll see what happens. But interesting. Ethereum's a little different. Seeing a little more of this continually up tick in Ethereum. Bitcoin's been kind of sideways, and we're seeing Ethereum move to the upside. We're seeing some more institutions get in. Tom Lee's been out there talking it up, but we still haven't got past this 50. We're kind of going between our channel line, our central channel line, and this 50, and it's getting tighter and tighter. So it's going to break one way or the other at this point. The only thing I don't like to see is this stochastic crossover negative and then continue to move down, and then momentum just kind of staying the same. So we'll see, kind of like the last 4 days, you see we're kind of in a sideways movement going from the top of the channel down to the center of the channel, and we'll see what happens. And again, this trades 24/7 on the crypto exchanges. MicroStrategy still looks like Bitcoin, sideways, right along support. So it's good that support's there. It's good that the 9's above support, and that's right about where we're going to open. And you have a lot of nice movement on your oscillators. It's still looking good on the stochastic. It's just slow because you don't have any momentum. It's just at 38. It's been in the 30s. Something can kick that momentum up. We'll see that move up again. So again, really close Bollinger Bands. We got a lot of moving averages right in this area. You got the 20 and the 9 on the short term, providing some support along with some support from the intermediate support level. So there's your MicroStrategy. IBIT, if you're into the Bitcoin ETF, looks the same. It's above its intermediate support level, and it's been playing right along the 9, and you can see right at the 20 for resistance. And look at these Bollingers starting to close up, kind of meaning we're going to do a sideways coil up here and see which way it goes. It looks just like MicroStrategy to the most part. NVIDIA sideways. And I think I'm going to go back 6 months. We'll just take a look and look at, I mean, we're all the way back to July, and we've just been kind of playing along this level. We got a bump up. This is when we got Oracle came in and was talking about all the money coming in. It looks just like the Oracle chart, except Oracle dumped down, came right back down, and we're just sideways. And look at the Bollingers coming back together. But when you look back here, the Bollingers were pretty narrow and straight, except for here. Now we're coming back to that same level. Starting to see a potential rollover on the MACD, and it's actually happening in the stochastic, and our RSI has fallen below 50, so the momentum's down, and we dropped down below the 9, and we're right on intermediate support level right there. And that's where we're going to open. So again, we saw what's happening. Money's been moving out at least this week with this Fed rate cut and juicing of the economy. The money goes to the small caps and the older economy is what they call it. Meta. For Meta, we tried to get across that 200 and we just didn't. It did come back up and found resistance right here on the 9. You can see. So today we're going to open up just a little bit below that. I don't like this here on the stochastic. It's usually an indicator where the MACD is going to go. Got to get past that 9 if we're going to do anything. And then right there, got the 50 and the 200 right on. It's like a huge line of linebackers sitting right there waiting for price to come up. You see, we've tried that before. So ever since earnings, we've just haven't been able to get Meta to move very well. And, that goes back to spending. When it came out to earnings and this happened, what was the big thing? We're spending too much. How are you going to get it back? And that was the worry. And it's still fighting that today. And you see the same thing in Oracle. Okay, Microsoft fighting the 200 still. We're above it. We bounced off of it, but we came back down underneath the 9, and that's about where we're going to open. Again, I don't like seeing this here on the oscillator on stochastic, but again, just kind of sideways. I'm going to go back. Well, we are 6 months. We're all the way back. We've kind of been just sideways. We're not really moving anywhere. In fact, if we're moving anywhere since the beginning of November, where actually you could draw a channel down, from earnings on Microsoft. And so why are these things going down? Because of earnings. I think Trent might talk about that a little bit when he comes up. Apple's been, doing very well, except, we go back to where July was, and it was flat for a lot of these companies. Well, Apple was, actually down, crossed its 200 and has been up, but flat since about the end of October. So about 45 days, we're kind of on this flat pattern with Apple. And you see, the MACD has crossed over. We had a crossover the stochastic here, but it's really, price action's been pretty flat, and we're right up where the 9's right on the intermediate resistance level, and that's where we're going to open. You got the 50 coming up here. We'll see if we can bounce off that, or if we go back through it. But we're kind of looking at the same thing. Bollinger Bands are parallel sideways. So Apple's kind of in that pattern now that we see some of the other Mag 7s have been in for a while. Amazon is it's been up and down. It's been really good on this 50, and until it breaks, and then it stays under, and then it gets above, and it's under. So it really plays that 50. But when you look at intermediate resistance, it's right in this level here, and that's where we're at right now. And we're seeing the Bollingers come back on Amazon. So it's kind of been all over the place on Amazon, but it's been flattish here lately with resistance right above it. Google's pretty interesting because they came out with their earnings, and in their earnings they show that they can make money and spend money at the same time, and that's where you have this nice run up. And then all of a sudden we get resistance up here and got a distribution 21 cents, but sideways. See the 9s come up and starting to roll down a little bit. We can see that right here on the MACD. We're rolling down. So if we see that 9 come down and start pulling price action down on Google, there's just nothing I see that's pushing these up at this point, like we've seen before. I think it's just that drag, thinking about return on investment. Just my opinion, though. Happy to hear yours. Here's Tesla. We've been kind of sideways since September. down and right back up to resistance. Crossovers. It is above the 9, it's above the 50, it's above the 20, but we're right on resistance. We got to get something to get that to move off. Palantir, again, Palantir, we're all the way back into August. Here's your resistance. Had a nice support at the 50, support at the 50, and it fell like we've seen a lot of these guys fall, came back up and right back to resistance on Palantir. The oscillator looks pretty good here, but we just can't get past that resistance level. But you see this oscillator move up when we crossed over the 9 and we moved up, and now we're flattening out for a couple of days. We'll see if that comes back down and recrosses. And the way you look at it, the stochastic has already done that, so you're kind of expecting that to happen on Palantir. Not always, but suspect it. On our watch list, we talked about CG up about 10.5%. Put it on the watch list here. I didn't get into it. I didn't think it was going to get past this 50. It did, bounced off it, continued up. You have resistance at some sell orders at 61.74, and then intermediate resistance at 63. So if you're in it, put in some stops, go back, find a place you might want to put a stop if it bounces down, maintain your profit. Otherwise, ride the bus until the end and keep moving your stops up. So you're up to 10.5% in about 2 weeks. PMNR, this is Tom Lee's, got into that. Doesn't look as exciting, but we're actually up 25% on this. Came down a little bit yesterday, but it really didn't hit. Let me move a little closer so we can see. Really didn't hit. Here's our cost basis right here. It's right on the 200. So again, here's your 200 if you wanted to use it as an investment trade. We do have a little bit of a crossover here, but we are up around 90. So that tends to where it flattens out. A little bit of a downturn on the R side, but that's because price action went down. But some parallel Bollinger Bands, you got resistance at not only the upper Bollinger Band, but you got 50 up here. But you're still playing right off the 20 and the 9, which are 2 levels of good support. So again, you want to put in your stop somewhere, maybe right above that, maybe right below that. Maintain your profit in case it pops down and hits. Then you're out and you got a profit. And don't worry about losing this much because you made this much, and it still could run. You don't know which way it's going to go. TRGP was the last one, and it don't want to come up, so we'll try this one again. TRGP, get a little closer. Cost basis right here. It's following that. We like these slow runners right up along the Bollinger Band. You can see that the Bollingers are diverging. You're above the 200, you're above the 50, above the 20, you're right above the 9. Again, you can put in a stop back here anytime you want, get out above your profit. Always have a stop in case, if something happens today and it pops down and you're out before the weekend. You got some sells at 188.41, but your resistance level, your intermediate's up at 205. So potential for one of those kind of long runs up. But you always want to protect your downside. But the oscillators still look really good, on this one. So up about 3.7% on that. I'm going to look at, as we played Berkshire for the investment, got out when it hit the 20 or the 50, came down. It's come back up and found resistance not only at the 200, which it whipped up to, but right at the 50 where it closed again. We'll watch this one again. It's going to come down. We'll see if we can get some crossovers here, crossover again on the MACD, and see if we're going to get another swing or we're going to get another investment opportunity. But Berkshire is always fun to kind of trade. Some other ones that you may want to look at. I don't like getting in on a Friday for weekend risk, but Carnival Cruise took off yesterday. It was going right along. I've been watching it on the 200, and it kind of popped up on Wednesday, and then it got really frothy here on Thursday. It got above the 50, got above the 20, and closed right on sell orders. You got a little bit more to go, but that's a lot of momentum, but all your oscillators are up. So something to look at, on your watch list. I won't buy into it today because of, again, weekend risk. Here's a Illinois Tool Work. Trying to get past that 50. Wednesday it did, and it just popped up. You don't have much upside left, and you're outside the Bollinger Band. But when we look at the amount of companies, percentage-wise trading above the 50 and the 200, you're starting to see that in the charts. Here's across the 50 and across the 200. So we're starting to see that momentum go up, and it's going up in the old economy kind of stocks is what they talk about. KDP, I'm going to do this quick. KDP under the 200. This is where we hopped in. This is another one of those slow ones, rolling right along the Bollinger Band. We're up on this one about 3.1%. DXCM was the other one. We're up about 3.7%. Here's our cost basis. I like everything just still moving up the Bollinger Band. Got some sells up here at 71.05. So those are the ones that we have still on the list. Some of the other ones that you might want to look at that weren't on the list. You got Arthur J kind of crossed over the 9. I want to see better movement on these Bollingers, but we're starting to see a setup here on AJG, DPZ, which is Domino's. Domino's, had a nice run sideways and came back up a little bit. Got some crossovers on it. There's just things you can watch. Again, I wouldn't get in on these on a Friday. I don't like the weekend risk. Some of the others that are out there, Broadcom, just because we had earnings. See, Broadcom came up. It's been hitting its resistance level, and then you had earnings, and now we're going to open up right down here on the 20. So it's going to open up a little lower. Had a lot of volume yesterday because of earnings, and then we're opening a little lower in Broadcom. Someone wanted yesterday APLD applied. Applied, actually this moved down yesterday. Intermediate resistance was right here where it hit, and now intermediate says move down. So now you're crossing, got the 9 in intermediate resistance right there. 3 days of kind of down trending here. See the oscillators are turning around on you. So wouldn't be the time I'd get into applied on a swing. It would have been back in this area, got out at intermediate resistance, and then let it come back down. So I'd wait on that one. But looks like for a swing trade, we're out. If you're in an investment, you use the 200, you're in. You use the 50, you're right on the border, okay, for your investment. I'm going to move it over to Trent. Sorry, Trent, took a little more of your time, but
All right.
I'm interested to hear what
Really,
you have to say. Sorry about that.
that's all right. So I just want to hit on a couple things here. First, we're going to start about the maturing bond market. I'm going to be brief on this. This is a chart of all the Treasury notes and bonds in their maturity schedule. 9 billion will mature next year, which means the United States Federal Reserve Treasury will have to replace that 9 billion. Most of that's, I think, financed below easily 2%, if not lower. They'll be refinancing. If they refinance it today, it'd be around 3.6, 3.7%. That's a major increase in servicing debt. That hurts. So that's why you're seeing this massive rush into by the Federal Reserve to do what is not quantitative easing and going and buying short-term bond notes and bonds. So bit of a headwind when you look at it. It's a big chunk of money. It's a big chunk to cover in a matter of basically 12 months. So something to be aware of and how that will affect markets. The other side of it, I talked about this earlier this week about the 30-year going up above 5 to 6%. A lot of your credit card and other finance, credit short-term unsecured financing is based on the 30-year, and that as that yield goes up, they're going to be fighting that as well. So the Fed is basically in this headwind, in this got to get this done fast, where they lower the 2-year to a reasonable level that the United States can afford to service it, refinance that debt that's maturing next year, and then if the 30-year goes up between 5 and 6%, start quantitative easing on that end as well to suppress. So they're scrambling right now. So be aware of that, because that does eventually translate into strain on the US in equity markets and bond markets. And the other side of it is you're seeing an enormous amount of money flowing out of US denominated dollars assets into foreign denominated assets, because one, the cost of borrowing, as we've talked about with the carry trade in the past is escalating. So they got to reshuffle that money and pay that back before it starts costing them an enormous amount of money. So you're starting to see this cycle happen, which brings me to the other cycle that's happening. And that is, bear with me here. Where is it? Share. There we go. Is CapEx spending. What is CapEx spending? This is the amount of money a company is willing to spend on services, hardware, equipment, all that kind of thing. And this is a picture of the the NASDAQ CapEx spending achievers index. Pardon me, hold on. And basically, what this tracks is how much money these companies in the NASDAQ are spending each year. And what it shows you is each year, you can go back to 2020, there was basically a 15% increase year over year. 2022, or excuse me, 2021, 29% increase, big jump, right? And then 2022 was a negative 28% decrease. Pardon me. Wow. And now 2023 is 32%, 2024, 14%. Now 2025, presently, this is going back to December 10th, 20% increase. So what we're seeing is we saw a peak in this in 2023 in CapEx spending amongst the top achievers in the NASDAQ, and now it's the rate of change is slowly declining. Now I go back to my brother-in-law's industry, the oil industry. And when you look at the oil industry in the last 25 years, you saw an enormous amount of CapEx spending between 2010 to 2014. And it was all about fracking. It was all about oil independence from other countries, Saudi Arabia. And so saw this enormous amount of CapEx spending in the oil industry to punch more holes in the ground, to discover more oil, and they discovered fracking as a way to get to places that they typically wouldn't be able to get with a straight down oil, drill. They were able to go lower, which means the technology advanced in the oil industry and gave them the ability to go 10,000 feet lower and sideways, and then push that oil out through a fracking process, and oil industry exploded. In particular, CapEx spending. Now that peaked right around 2012. And then the oil industry or the oil stocks and all that peaked about 2014. Since then, it has just declined. Going into 2026, what is the most in-demand needed thing in our country right now? And that is energy. You have all these data centers being built out, billions of trillions of dollars being spent on CapEx spending by the technology companies, the AI spend. And now we're hitting that peak. We are at 2012, where the oil industry was when it came to CapEx spending. So that spending is going to start most likely starting to decline. What is going to be benefit from this AI CapEx spending? The oil industry. What is the most readily available commodity that can easily be turned into energy in the United States? Natural gas. Here's the thing. CapEx spending in the oil industry, in particular drillers and parts manufacturers, spending on those products has been very low in the last 3 quarters or so. So as we get into 2026 in the oil industry, in particular exploration and equipment manufacturers, you're going to see a lull in the first quarter of 2026, and then you're going to see a catch up spending into second quarter and throughout the rest of 2026 into 2027, because there is so much demand for energy in the United States now, because our infrastructure cannot, in its present state, afford or is not compatible for the demand of energy that is now being placed on the infrastructure. Natural gas exploration in the oil industry is going to become major demand for that replacement as we build out infrastructure for energy. So what I'm looking at is 2026 is you're seeing a sideways movement in or sideways or declining movement in AI spending within companies. A lot of questions are coming up when it comes to margins. Brian asked about how did the CFO, what do you mean by they're going to have declining margins on their for 2026 for Broadcom? And basically, it's gross profit margins are getting diluted. Well, a lot of these other companies are going to face the same thing. You got one product that has a 68% profit margin, and then you got another product within that company that's 40%. You sell them together, boom, you got a decline in your gross profit margin. So you're going to start to see this happen, I think, not just with Broadcom, but many other companies. The cost of the inflation element is starting to get expensive. So your CapEx spending in your AI development is going to start to slow, just as we've seen during the oil boom bust from 2010 to 2014, just as we saw with dot-com boom bust with fiber optic development. Eventually, your shareholders are going to say, I'm not getting the return I used to get. Where else can I take my money and go? And we're starting to see that. As you see profit margins get squeezed, and as you see some of these deals between big AI company providers, hardware company providers to the AI developers like ChatGPT start to wane and get, maybe those deals don't actually come to fruition, which still can happen. You're going to see a decline in CapEx spending as well as the decline in prices in these high flyers. So where do you take your money in 2026 to 2027? My opinion is we got to have energy. In my opinion, it's the explorers, it's the companies who go out and drill holes and find oil throughout our United States and turn that oil or natural gas into usable energy to power these data centers. It just sort of hit me this over the last couple of days. I was like, at some point, what goes up must come down. And I think we're in the beginnings of that stage with AI spending. And as it declines, you will see a lack of return to the shareholder because at the end of the day, if you bought Nvidia at $138 at the first of the year and it goes to 126 at the beginning of 2026, then you're going to get out of it. You're going to go where the next upward trend is. My belief, it's going to be in the oil industry. It's boring. It's not exciting, but it's where money will be made. So keep that in mind as we go into 2026. Look at how much these guys are spending. That's actually hitting the books, not the promissory notes that everybody's making. Look at how this is going to translate. And I think that's where you're going to see this shift. And my phase indicator has said it, basically is indicating you're seeing the back half phase of phase two. Phase two is the back half end of massive spending and growth. We're now entering the decline in CapEx spending. And you're going to start to see it more and more as we get into first quarter and second quarter. And you're going to see more and more spending in the oil industry, in particular, the exploration segment. That's my Friday note today. You're seeing a cycle shift. Pay attention, protect the profits you have, and get ahead of the game with us and look at where this money is going to eventually flow. So, all right. I will, Zeke, you had your hand up for a while.
Question for Mark, an easy one. At least the question's easy.
Well, thanks,
Uh,
Zeke. I like easy ones, especially on Friday.
okay, good.
Yeah, yours good,
Inter
Zeke.
intermediate resistance level.
Yeah.
I don't know what that's all about. In case you're wondering, I'm loading up on knowledge. I'm not really invested at all. I'm loading up on knowledge, and when I get to a point where I have enough of that, then I'll jump in. So with that in mind, intermediate resistance level, what's that all about? How did you plot it? I have a general idea what it means, but I don't know
You
where you
see,
get the information from.
you see my screen here?
Yeah,
Okay, you go up to technical analysis. This is on Active Trader Pro. This is what I use.
yeah.
And I always hit stops when I hit support and resistance. You hit support and resistance, that puts your support and resistance on the chart. Okay. So here's your intermediate resistance level, and here's your support level. Okay.
Okay. Yeah.
So, and again, these are really close. And let me go do, let's see, let's go to NVIDIA. Maybe that's a little further apart. Nope, they're pretty close too. Let's go to IBM. See if they're, yeah, okay. So here you put on, here's your support level, here's your resistance level. You can see it goes back in the program and calculates where resistance is. You can see it's pretty good line, you know. And so you can click on that line if you want, and it gives you long term. Here's your support and your resistance. Okay. Your support's down here on the blue line, your resistance up here on the green line. You can move it and see if it actually moves. In this case, when I went to short term, it brought support way up and kept resistance the same. If I go to long term, it goes back to about where intermediate was. So I always use intermediate for me. It's an indicator I use a lot that tells me when I get out. When it hits this, it's a pretty good, not always, but unless some unknown market condition that comes out that, you know, like like Oracle coming out and saying, "Hey, I got $600 billion worth of future sales," and cause it to blow right through that. Okay, but until that happens, it's a pretty good level of resistance. So that's where I get it up here in technical analysis, puts it on there automatically for me, support and resistance. And you'll see it trades kind of between that. Support has been a really good one too on the bottom side when it comes down, and it'll ride along support for quite a while. Let me see if I can show you something on that. Let's go to, let's go to, because I watch stocks in that area too. So here's like Trade Desk, and yeah, that's not a good one. Let me do another one. AMT, maybe AMT. Here's AMT. Here's an intermediate support level. Okay, it came down to intermediate. Here's your resistance. It came down and it's been on this support level for a long time. And I just watch it to see if it'll ever break out and head back up. On this case, it didn't, but it's a pretty good level, you know, support as it is on the resistance side. IRM. I keep a list of these. Iron Mountain. I'm looking for a swing. Iron Mountain has came down and hit right along support. I kind of watch for the 9 to come down, go sideways and come back up. So when I look at Iron Mountain, I come down, I look at my oscillators. This support is held, and the 9s come down. It got above the 9. Now it's a potential for a swing trade up under the 200. See how that works? That's support. The other side is resistance. Okay, like applied. You know, applied, the resistance was up here. It recalculated down, but you can see when it hits, it starts to move down a little bit. So I use it myself, and you know, as a swing trade sign to get out. Okay, on short term swing trades, and I use the support level as a potential where I might want to get in. Does that make sense, Zeke? Did I answer that?
Yeah, it does. I've had a lot of problems with Active Trader Pro lately. Not in understanding. I've had to call Fidelity about it, and they had to up my something or other in the oh, I don't know. They were talking uh, technicalities.
Did they fix it? Did they fix it for you?
Oh, well, yeah, they fixed it.
Okay.
after they blamed it on the fact that I still had Windows 10,
Yeah.
and when it switched to when they Windows 10 stopped doing their upgrades, they blamed it on that. And then, but finally, after 2 weeks, they realized they needed to up my basic my I think my bandwidth. That's the one.
Okay.
So anyway, with that in mind, I kind of started to get into Trader Plus and figure out how to run that. I don't see that function in Trader Plus. I've looked for it. I don't see it. And I just think it's th those two bits of information, intermediate resistance and support, are the greatest thing since sliced bread.
I use them a lot. I do. It saved me a lot of stress.
Yeah.
Yeah.
Well, maybe they'll stick it in Active Trader Plus when they finally figure out what they're going to do.
Yeah, I haven't switched over that yet. I'm always reluctant until it gets a little more history behind it that I don't want to switch everything over and then have an issue, especially when I have to talk to you guys every day and I don't want to spend, 23 hours on the phone with Fidelity trying to figure out how to get my old screens back.
Yeah, exactly.
Yeah.
Thank you.
Yeah, thanks, Zeke.
Can't hear me? Can you hear me?
Hey, David, go
Oh,
ahead.
can't hear me.
That's Paul.
Yeah, David's got his hand up.
David from Sacramento.
Thank you. Yeah. So Trent, that's a great analysis you've done there. I was curious about you mentioned that the primary need was for natural gas demand because that's going to be there in order to supply the power for the data centers. But then you're suggesting that we go into oil companies, and I haven't quite put the two together as far as
Sure.
the demand being in natural gas and investing in oil companies.
So think about the process of oil, getting oil to your or energy to the grid. The first part is exploration, and there has been a lack of capex spending in exploration. Okay, so that is going to be your first phase. There's major demand for energy, so the first thing you got to do is you got to find the oil which then has the natural gas in it, and that means exploration. That means companies who go out and they punch holes in the ground, they identify where there's a patch, and then they start drilling. They drill, they hit a point, and then they start bringing that out of the ground and refining that. They separate the oil versus the natural gas. Natural gas is then converted to energy and then so on. So you're going to have this phase transition in the oil industry. So you go from the boring, dirty exploration companies, the ETFs are like XOP and IEO, to then refining, to then deployment. And that's where the big Exxons and Chevrons and Shell oil hit. That's the end point. Okay, so they're putting up the money, the big boys. It's the guys who are punching the holes, the explorers. They're going to first feel the first demand for that, and that will come the second quarter of next year. And once that happens, then the big guys who sell the natural gas after it's gone from the ground to now ability to apply it to energy and turn it into a data center source, then that's sort of the process. So that's sort of how it ties together. So what I'm looking at is the stages of oil. Lack of spending in capex spending in exploration has to come on. Big amount of money is going to be done because it hasn't been done for years. Now you bring it to the surface, you refine it, you deploy it, it hits the big boys. So the way I would look at this is the first, second quarter, third quarter, fourth quarter of 2026 will be exploration. And then it will transition to the large, the Exxons of the world. And they will then reap the profits because the data centers, the Metas of the world, will then pay Exxon for that natural gas. So it's a process. It's just sort of like AI is a process. AI started out as, you would have never bought NVIDIA, say 5 years ago, because it was a gaming stock. It was a gamer's chip converted to Bitcoin mining. Then Bitcoin mining became real popular. So the demand for those chips went up. Then AI came about with OpenAI, became very public. And then it became an AI company. They just relabeled that gaming chip. And there was massive capex spending on AI chips, and that's where we're in that process. So it's the same thing in every industry. You got to tool up, you got to explore, or you got to explore, tool up, and then you go into spending mode. And I think that's what you're going to see in the oil industry, which will then naturally, because natural gas is so plentiful in the United States, that's the quick go-to. If you burning diesel gas to run a generator for an AI center is not a no-go environmentally. So natural gas is the cleanest way to do it, and there's plenty of it here in the United States. Prime example, where Meta is building their Louisiana data center, the $10 billion expenditure they're doing, there's natural gas right there. So it's easy pipeline to that. And that's I forget the name of the company who's building out their energy plant next door to them for their particular case. To me, that's the connection. That's how you get it, and that's how you play the energy boom from discovery, explore, tap in, turn it into energy, and then sell it to the big boys. Does that
Got it.
help?
So the gap in my understanding was really that although you call them oil companies, they actually produce oil and natural gas. I mean, it's
Yeah,
yeah, okay.
they're all in the same hole. So when they put a
Right.
hole in the ground,
Are
there's
they?
oil there and there's natural gas.
Okay.
Yeah.
Mm.
Yeah,
And
Bitcoin miners back in 2020 or so, I went to a conference in 22 in Miami, and they had a breakout session with these oil guys. And it was crazy. I'm like, oil guys at a Bitcoin conference? That's crazy, right? And
yeah,
these guys were like, we're making money now because we had all this natural gas that we used to burn off.
Hmm.
You'd see
huh.
the pictures of the
Yeah, the
flames.
flame,
They were
yeah.
just burning that. Well, these Bitcoin miners were showing up at the location saying, "Hey, can we tap into that natural gas and turn it into energy to run our Bitcoin miners?" And that is a big deal in Wyoming, Texas. And so you had all these Bitcoin miners show up at the oil, holes and take their natural gas, and they were giving it away for free. They were
Wow.
giving that natural gas away for free then. Then the oil industry said, whoa, wait a second. This is, and you think about this, that's the beginning of a data center revolution. Okay. Bitcoin miners like ramrodded that in the beginning. They tapped into free energy from natural gas burn off, turned that into energy. So their cost to run miners was low because the biggest cost to run a miner is energy. And then the oil industry caught on to that. Now the data centers are just turning Bitcoin miners into data center development, AI processing. And now they're going, we need the energy and we need more of it. And then the oil industry is looking at it going, great, we'll provide it for a price.
Right.
I think
And as
Billy
far
Bob
as the
Thornton was there.
Huh?
I think Billy Bob Thornton was at that conference. He was the landman.
I think he was. I think it was what's his name who wrote that. I think I
Oh
saw
yeah,
it.
Taylor
But
Sheridan.
but yeah, I think it's just interesting. And my brother-in-law and I said that had a talk about this a couple of years ago. He says, "You know who invented recycling?" I was like, "Some scientist or some tree hugger?" He goes, "No, the oil industry did. The oil industry invents everything." He goes, "That's why we're not going out of business." And I'm like, "Oh, oh. So who's going to be a big winner on the long-term scale of AI development and data center development? The oil industry." You're just in the beginning stages of another boom in energy demand in our infrastructure. And think about this, like the electricity gets to my house. Where's that? What are the stages of me getting energy to power the lights in my house to do this Zoom call?
I'll put it on the
You
roof.
think
I'll put a
about,
solar panel on the roof and it generates all the power I need.
okay, but I mean, you live in a state like maybe Washington State where it rains 300 days of the year.
Oh.
You're still dependent. But think about that solar panel. Who makes that solar panel? What is it made out of? It's made out of oil.
Chinese
It's
silicon.
refined. So it's all connected. And that's where I look at this whole cycle of AI in particular, let's just say technology. You have you have to power it. And the biggest powering source is natural gas. Cheapest and cleanest is natural gas. You're not going to see a bunch of coal plants, being built anytime soon. We only have so much lithium that we can access here in the United States. Natural gas is just it's an easy, cheap way to do it, and we got plenty of it. Now we got to spend money to get it out of the ground. And I think
And
that's
the
where the
ex
next revolution in this AI cycle is.
and the kickoff with the exploration. Do the oil companies subcontract that out to Schlumbergers and things like that, or
Oh
is it,
yeah.
so
I
it's
mean,
more they do it
The big
themselves
yeah,
ones
or
they
have their
don't.
own. The big ones have their own, but like the
right?
wildcatters might contract that out a little bit.
Yeah, a lot of it is subcontracted. So, for instance, my brother-in-law, he makes pumps and valves for oil and natural gas rigs. He's been in the shitter since 14. Like, he went from hero to just above zero. And he says, we'll get our turn again. It's gonna be, it's coming because and it's all thank goodness for Jensen Yang. You know,
Yeah.
it's all about energy. And they're starting to see signs of a kick up in demand for their pumps and valves because now the demand for energy to power these data centers is starting to scale. And if going back to my comment, I think was a week ago or 2 weeks ago, of all the money that is being promised to build these data centers, only 10% of it is actually in process. You got a whole nother 90%, as long as it sticks, that's still to hit the ground and break ground, which means you're going to need energy. I mean, think about that. How massive the demand on energy in the United States will be. And look who's going to make a ton of money on it. It's the oil guys wearing cowboy hats. You know, that's they always win.
There's going to be a big
So
demand for hats, you're saying, is that right?
I think so. I think
I
so.
already, I already got mine.
Yeah, I got a dozen of
Yeah, I was going to ask you how much is your cut, Mark?
How much is my cut?
Yeah,
Can't
well,
say
you
it.
got
Mark will be.
you got the cowboy hat he mentioned. I mean,
I do.
so how much will that fill up?
We're more in
Yeah.
the business. We're more in the business of selling gas that comes out of cow butts.
You can sell that. Wow, there's big industry
Oh
there.
yeah. That stuff is
Methane.
flammable. That stuff's flammable. You learn that on one drunken night out in the cow field.
Yeah, but
Yeah,
collecting
yeah,
it's kind of
yeah.
tough, isn't it? Got to have
But
a lot of paper
yeah,
bags.
no, well, yeah. Well, they've tried to blame that global warming on our cows and
Yeah,
cow farting.
Oh, they
but
were
I
trying to take them
Yeah.
away.
Yeah. Then they wonder why the beef price of beef is up because we didn't
wow,
raise
this is
that many cows
But
anymore.
I guess you could artificially ferment grass, couldn't you? And then that would produce
Yeah, I
methane.
mean that's a lot of people have what they call it, where they take all their grass clippings and stuff, they throw it in this pit, and it turns into mulch kind of stuff. Yeah,
Compost.
compost. Yeah, yeah.
yeah, yeah. I think it's um yeah, I think it's just interesting. I think the thing I want to emphasize is, and Kerry told me this years ago. He said, everything comes to an end at some point. Hopefully he'll remember that. But but I think everything goes in cycles, and we're now, and if you just look at CapEx spending on industries, where is the money being peak spending or low spending to peak spending to declining? It's a cycle. Look at .com. We had a major .com boom or technology, you know, build out from 1990 through 2021. It escalated in what, 97 through 2000, and then it started falling off. And you had that downturn in technology, and it went to somewhere else. You went to housing, then that busted. And then you went to oil and gas, fracking, 2010 to 2014, boom, bust. Now we've been in a sideways a little bit, but a technology boom. Boom, starting to slide off to the other side. Is it going to bust? I don't think it's going to bust. I think the financing is going to bust, but I think technology, where technology is and how so integrated it is in our lives every day now, you're not going to see a major bust. You're going to see the weak ones fall out, just like you do every, boom bust cycle. But now you got another cycle starting to happen. That's energy. And I think that it could be is it a 600% return on XYZ stock? I don't know, but 600% return in 6 months is crazy. That doesn't happen all that often. But what you can do is position your core portfolio with the phase cycle, and I'm going to introduce by next week a new long-term asset allocation model to y'all. But you're also going to couple that by adding alpha, and that's where you find the companies like the technology or the AI or the energy, and you couple that together in a core satellite approach, and you stay ahead of the game, and you don't lose money.
The
You
added
preserve
benefit,
capital.
the added benefit in energy companies, a lot of them have dividends, you know,
Yeah,
so you get income and growth potentially.
yeah. Your smaller explorers probably don't pay out a dividend,
No,
and
they
that's
don't.
sort of that first phase we're going to be in going into 2026. But watch that CapEx spending. Look at where money is being deployed to have massive growth. We saw it with the AI cycle.
Put
When
in the chat. I put in the chat some ideas about some of the dangers of capex spending, and you go back to when the railroads were built. There were there were dozens of railroad companies building tracks right next to each other because and spending money to do it because that was the technology back then, and only a few made it. Most of them
yeah,
went bust.
what's every
Cars too.
every
Look how many
cycle.
car companies there were when cars came out, or
What
motorcycles.
Tucker was
Yeah,
it? Tucker cars
yeah.
gone.
Look how many.
Yeah,
When I was in the brokerage business, and we had do-it-yourself brokerages, internet brokerages. There were hundreds, if not thousands, of these little broker companies with internet websites. My job at where I was to go and buy them up. Now how many are left? You got Fidelity, you got Vanguard, you got Schwab.
yeah.
Very few, but there were
You
hundreds of
know,
them.
I look at Apple as an example of a company who's been way behind the whole AI boom. And I'm wondering, and they've had an enormous amount of C-level executive shift recently, if you haven't seen that. But where are they in this game? They got a lot of cash. They can stay alive. Where are they going to play out in this AI game? Are they going to be another Microsoft? I remember Microsoft being in $30 range, like back in what, 03, 04 kind of range. Look at where the price tag is on there. Look at the shift. Is Apple positioning for that shift? You know, they got the money, they got, the draw to bring in smart, people. Could they be a play 3 years down the road that is a 100, 200% gainer? I don't know. I think that's what we have to look at now is it's been easy, not theoretically. I mean, basically, we've seen a massive boom in AI, and the excitement over it. Now we're becoming stock pickers. Where is the industry? Where is the money going to flow? Who's going to survive the big, boom in AI? And then where can we pick up the next alpha bump, you know, in the cycle? And I think that's where we're headed right now. Um, Couple that with $9 trillion in maturing treasury and notes, U.S. Treasury and notes. It's going to be interesting for the next, I think, 12 months at least.
Oh,
But there's going to be incredible opportunity.
yeah.
So just
There's
keep an
always
eye open.
opportunity. There's always opportunity somewhere.
That's right. Yeah, there's
Sometimes,
always a bull
sometimes,
market.
sometimes it's boring and you have to wait it out. But other times it's
Yeah.
okay.
With a
Yeah.
So Trent, just a question is in general, are you going to be rolling out some specific stock recommendations that you have, or what's the
Yeah.
flow from now on?
So here's what I'm working on, because let me just if I can find it. Um okay. This is so I've been working on this phase detector, and I've started to put in the newsletter. And this is an economic phase detector. Basically, I'm taking different economic information and I'm creating the early expansion, late expansion, stagflation, recession, Decatur, or a re recession recovery kind of phases that economically we go through. And so what I've done is I've then identified what phase we're in. We're in that late expansion phase, peak capex spending, in particular technology and all that, and couple that with let's see here, all the different sectors in the ETFs that have over 500,000 in daily volume. So you can see all there. It then I filtered it out to, and this is a core portfolio. This is not, you know, AI or you know, hyper focused in one category, but this would be your core portfolio. And right now, what I have is just different ETFs that represent financials, healthcare, industrials, energy, and materials. You can see over here what my calculations have come out to: overweight and strong overweight. Um, so that is what I'm hoping. I luckily have Ginger's my wife. She's an artist. She's been on a big show tear recently, and we finally finished up last night. So I'm going to be able to not be distracted, and I can focus on building a true asset allocation model that uses these phase indicators, or this phase indicator, and what industries. And so what I'll eventually hope to have by mid next week is core allocation. So that would be determined by this phase indicator, and then a satellite approach, and that would be Kerry's AI focus, identifying different areas and companies in, like, for instance, what I've been talking about, the phases in the energy build out, the phases in the money cycle from, the Japanese carry trade, reversing that kind of thing, and bringing that as a core portion, and opportunities within those different sectors. And so that's what I've been working on late at night and putting together for you all. So I hope to have that preliminary asset allocation model that you can put in, and I'm hoping that you could just put in a dollar amount and it would automatically populate the idea of where you could, how much, depending on your risk tolerance, your time frame, and that kind of thing, how much should be in your core, how much should you be in your satellites, and hopefully roll that out to you all later next week as we go into the Christmas months. But my whole mission is taking Kerry's and Mark's knowledge of fundamentals and technical analysis, and then bringing that all together in a risk managed portfolio management strategy, so that it's a full deal instead of just hyper focused on one area. Because no matter what, the world will move in different cycles, and I believe you gotta stay winner during bad cycles, and I think that to me is what I'm trying to create here and bring to you all as a part of the Platinum channel. So yeah, that's what I've been working on. That's so yeah. So hopefully I have, a preliminary look at the asset allocation model sometime next week. And I'm probably, Mark and I are gonna host a asset, talk a discussion about asset allocation. That will be one of my features of what you guys can use. So I'm trying to front run the ups and downs of the market for you and give you some
Sounds
direction.
sounds great, Trent. Thank you for doing all this. Fantastic
Yeah,
work.
well,
Yeah.
I
Thank,
love it.
Which
thank
day are
you,
you,
Trent.
just to know
Thank you,
which
Trent.
day are you planning to do it on? Sorry, do you
I
have, because it's
probably
just kind of hard for me to attend every day. It's just too much time. So, but
Yeah, so we would do it in the afternoon, probably Thursday. I'm gonna buy myself some more time out till Thursday. So maybe
right.
we do it like a 3 o'clock in the afternoon,
Oh, okay.
Central Time kind of
Yeah,
thing. That way more people can be on it. But Mark and I are working on putting that together. But I would say Thursday of next week. I want to do this because I think we're entering a phase change, and I want to make sure people, preserve and protect, you know, at the end of the day as we go into next year.
great.
So
Please,
I
Trent,
hate losing money.
please, Trent,
So,
do try
yes,
to
sir.
maintain Thursday next week so that myself I can be there because Thursday is a day that I have, so I can be there too. Please, just don't change the date again. Make sure you try to do it that Thursday so that I can benefit me too, please, if you don't mind. I don't look only on myself, but that day, if it's a Thursday, I'll be able to join me at 3 o'clock. With the 9 to 5, it's not very easy. So,
Yeah, if
so much.
well, I take that into account because like on Kerry's call, he gets a pretty consistent, a lot of people after especially on the East Coast, it's 4 o'clock y'all's East Coast time. So I think this is something that's important to me and Mark, and I think if we can do it later in the afternoon, we will. That way more people can participate because I know everybody has things going on during the day. So yeah, Willie, we'll definitely take that into account.
Yeah. Thank you. Then one
Cool.
last thing for me. One last thing for me. So Mark was saying that he has the Fidelity ETF and Vanguard and Schwab. All those does he make money with all those right now? Because I tried some of them, but they did not move a whole lot for a long time.
So you're referring to what platform?
Mark said recently, a few minutes ago, that he has Fidelity and Vanguard and what. So I was asking if was he referring to those ETFs for Fidelity and ETFs for Vanguard and Schwab, all those? Is that what he was meaning? He was talking about owning some Fidelity and Vanguard. I thought it was because we were talking about ETFs. So we're just curious. So was that ETFs for those people or?
Oh, Mark,
I don't,
were you
I
referring
don't,
to ETFs or
I, for what, for
Fidelity
what
platform?
Fidelity platform we talked about how there's only a handful of discount brokers left from when I first started. There were hundreds,
Okay.
one's Vanguard, one's Fidelity. You got E-Trade and you got Schwab and, JP Morgan has their own platform, I use Fidelity.
Yeah.
Okay.
Yeah, I
Thank you.
think
Thank you so much.
Yeah.
yeah, I think that Mark was talking about the platform, Fidelity platform. I don't know if Fidelity actually makes ETFs.
They do. Yeah, they do.
They do. They
Oh,
do.
yeah. Yeah, they're
Okay.
huge.
Yeah.
All right. Well, it's 10 to 9. So
Hopefully this has been helpful.
yeah, hopefully.
Somebody just asked how to find Kerry's meetings on Friday. You might want to address that.
Okay, that's
I don't know
on.
who it was.
So that email goes out at 2:30 Central today, and then again a reminder at 2:45 Central Time. As well as the link is in the morning newsletter. It's after you read through all the morning update stuff, there is a link. There's one for the Morning Edge, and then there's one for Kerry's call at 3 o'clock Central Time today. So there's 3 areas where you can get it. If you're not getting that email, check your spam folder, or text me, uh, and I will make sure you get hooked up on that. Make sure you're double check to make sure you're getting those emails. But a lot of people have been getting the emails have been going to spam, and they're finding them in the spam. So double check on that.
Randy says I
Randy,
get
not
yours, but
getting.
not Kerry's.
Okay. You're just I'm gonna drop my phone number. Please just text me your email and I'll double check for you. Bear with me. Okay. Okay. Yeah, you can, if you're not getting the email or the email reminder, you may want to check your spam folder, because some people get the morning newsletter, but they don't get the reminder. And I think it's because the spam filters see it coming from a different, or it looks different than the traditional. So, but just text me that and I will double check to make sure you're on the list. And with that said, we close out another Friday of the Morning Edge.
And
I
we're
hope
over
this has been.
we're over 200. No, I think the 9th was our 200th.
Oh my
right?
gosh. Yeah.
So we're on the 12th, so we're 203.
Yeah.
And
That is a,
You know,
and
it only seems like 199 to me.
that's
Eh.
right.
and how many people?
Well, we started out when it was just platinum. We started out, how many do we normally have? Like 30, maybe 20 to 30
15,
when it was
15 to
platinum.
20, 30. Yeah.
Yeah.
This month I think our peak was up and around the 90s in November.
We always have more when the market's down in the morning, like 800 points. We seem to have more.
Well, our number of people watching the replay has gone up as well. So
Okay.
so it's been good. It's been strong. So we hope to, bring more value as we go into 2026. And with
And
the
Christmas
Morning
Eve,
Edge,
we're
but
going to shoot
other
for
things we're offering.
4,500.
What's that?
Christmas Eve, we'll shoot for 4,500, right?
I'm not doing it Christmas Eve, dude.
Yeah, you are. I've already got you in my calendar. You're
No,
set.
sorry.
You're in there.
My calendar is not saying that. We're not
Well,
going to have it Christmas Eve or Christmas Day, at
I'll
least.
send the update.
Okay.
Well, we got a couple weeks coming up. After next week, there's 2 weeks of just nothing's going to be happening. So we'll probably do the same Monday, Tuesday on Christmas week and New Year's week, and then take the rest for family for the rest. We're talking about that right now. There's just not much going on. I'm not putting any list out because there's no sense even swing trading those 2 weeks at all. It's just no volume and no people.
So
It's a losing atmosphere. It's a loser.
unless something like major happens, that we would definitely jump on. But yeah, I think as we approach this very slow season, we'll take a little time off. But we'll have a calendar for you all next week as well. So all right, we'll wrap it up there. Y'all have a good Friday, and we'll see you at Kerry's call at 3 o'clock Central. If you're not getting that email, text me and I'll make sure you're getting it. And if I don't see you at 3 on Kerry's call, we'll see you next week. Have a great weekend, and we'll talk soon. Take care.
Thanks, everyone. Thank you.
Live loud.
All the best, guys.
See you later, Mark.
Yep, busy living.